What's going on, traders? Welcome back to another video. In this video, we're going to be covering what is going on in the markets today. I know there's a lot of blood out there. There's a lot of discounts happening in the stock market today. Let's talk about why exactly this is happening, what really triggered the cause, and is this the start of a correction, or are we in for a rebound towards the end of the week? So if you guys do enjoy these videos, make sure you slap a like. But without further ado, let's hop right in. So yesterday, the Dow had its worst day since February. The Nasdaq had its worst day since March, and today we continue to bleed with Nasdaq futures being down 2% and the S&P 500 being down 1.5% at the time of this recording. And this was followed by a crazy epic recovery towards the end of the day yesterday, closing nearly just flat on Nasdaq. But today the bleeding continues just like we anticipated due to the CPI number we received. We're going to be covering that later on in this video. Now, what are some things traders and investors are expecting in the current market conditions right now? Of course, with the high inflation, there are going to be lower stock valuations, especially on tech stocks that are trading at high multiples and have high PEs and are basically aggressive growth stocks. Those are going to have lower valuations as the market comes on down, and as these questions and concerns on inflation persist and pertain. Again, the spotlight is going back to Mr. Jerome Powell. Let him calm the markets. Usually he causes a lot of volatility. So let's see what he has to say in the coming weeks to months. Now, with the CPI coming in high, just like it did this morning, you would expect people to start moving their money into crypto, but crypto and Bitcoin have also been a little shaky. They've been stable, unlike stocks, but they haven't been really seeing those gains you'd expect with a number like this. There's also questions as to why are we still dropping, even after Mr. Jerome Powell himself said we should see higher inflation numbers. Why is this already priced in? Yes and no. Investors and traders, guys, they are still going to be selling the headlines. They see people start to panic. They see red. They see continued blood. After this horrible week we've had, they are going to be selling headlines. This is emotion at this point and a lot of uncertainty about this transitory inflation. It's transitory. The question remains to even ask myself, what does that even mean? That's a time frame you're looking at. We don't know. A week? A day? A month? A year? The pressure and the spotlight is back on none other than the Fed, Mr. Jerome Powell. Let him come and tame, quote unquote, the markets. Every time we have them on, we have added market volatility. Now, why the sell-off this week? Why the added sell-off? I know we dumped hard on Monday. This is all coupled in with current events that are going on right now. The outward rotation from growth stocks due to the I word, again, inflation. We have the gas shortage fear that is growing out in the east with the Colonial Pipeline. That should be fixed. I don't know by when. They say they should be making improvements by the end of the week, but that is still on the tables. We have the overall sell in May crowd. Sell in May and go away. Come back at the end of the year. And this is the very unstable time in the markets. You're not looking at the best market returns. You're not looking to print some tendies. So just come back towards the end of the year. Take a look at this statistic. It says, according to the data from Bank of America, mentions of inflation have increased nearly 800% year over year in quarterly earnings calls and reports. We know it's here, man. We know, is it here to stay? That's the question. We're not going to be ignoring it, and the market isn't either. And then to top it off, we have a rising 10-year yield. This is just almost like the nail in the coffin. Cost of capital is more expensive. Again, it's going to hurt a lot of the tech and the high growth stocks. As for the CPI, what are we looking at? Take a look at this insane hot number that came through. 4.2% growth year over year. We have 0.8% month over month, which is the highest since September of 2008. That starts to leave people thinking, what happened in 2008? What's the difference now? We have the same high over month, except we're not seeing that market crash correction just yet. That's a little spooky. Core CPI, which is minus energy and food, just because of the volatility, it's 0.9% month over month, which blew past the estimates, which I believe 0.3%, and it was 0.2 for month over month. As for some of the next biggest catalysts for Tesla stock, in which I am still holding my 30 shares, I'm down. I was day trading it this morning, hence the discrepancy in the average price. No, I am not down that much. No, my average price is now $5.99. I'm still in at $6.34, so I still have to make back some of those losses. But if it does come down to new lows under $5.75, I will double down and I will add to my Tesla position. The market is still open, so I might even just add 10 more shares by the end of the day. But the first big one is obviously the Biden EV tax credit, which is supposed to be coming out towards the summer. it's around 7.5K to 10K. That adds more incentive on people to buy an electric vehicle. Due to the current gas shortage, it almost brings back those toilet paper vibes that were going on last year when people were literally almost killing each other over toilet paper. That gas shortage, it's also going to incentivize people to go electric. Go get an EV. And of course, when you think of EV, you start thinking of Tesla. Your neighbor has a Tesla. You start asking around, where the mouth goes around, and you end up with the Tesla. And the next one, obviously, is the two gigafactories, Austin and Berlin, which should be up and running, if we're lucky, end of the year, but for sure, first quarter of 2022. And possibly one of the most hyped up things is the FSD, the full self-driving version 9 beta, which is coming out in a couple weeks. That should also be another incentive for the stock to push up, but in the current market conditions, I don't think that's strong enough. If the overall market, the NASDAQ stocks keep on pulling down, it's not going to be a big catalyst, but who knows, that's coming in the next couple weeks. A lot can happen in the markets in the next couple weeks. And we have the Cybertruck in the fourth quarter of this year. We already had a sneak peek on Elon's Twitter. We had the pictures of it in the Texas factory. We had it in New York when Elon was in for Saturday Night Live. We had that there, and we had people going crazy over on the streets. Yesterday, there was a couple of negative catalysts for Tesla. Number one being the halting of the plan to buy land to expand their Shanghai factory, which is around 450K, if I'm not mistaken, capacity on the year for production. So I think that might leave us shy of 1 million deliveries, but I do still think 1 million is very possible, especially we have the gas shortage, we have the EV incentive, the tax credit incentive. I think we might be just shy of 1 million this year. Just to quickly glance over some technicals here on Tesla, you'd expect a drop like this on Tesla to be followed by an aggressive rebound, and that is what I'm expecting and why I'm willing to double down. But it's kind of surprising that we're not really seeing that strength there. We've gone rejected here on the 4 EMA after this aggressive pullback, something that has not happened in the last two aggressive pullbacks. From 694 around 700 here to 539, which was that first drop we got clapped on. We had that bounce here to 720s immediately, and then we had another pullback to around 590s. We had that push in the next couple of days. We were at 786, and now that we're sub 6 again, we're not seeing that bounce yet. Leaves me kind of worried, kind of eerie, but I still believe that there is going to be an aggressive bounce. Traders are going to realize, hey, the market is oversold. This is plain out panic. If I'm completely wrong, I'm willing to take that risk, but if the upside is there, and I think I'm able to print some 10s on Tesla. As for some cryptocurrencies, let's go over some of the hot and trending cryptos right now. Obviously, one that is down that people are considering buying the dip is, of course, Shiba. It's down 38%. Bitcoin, as we mentioned, you'd expect Bitcoin to be pushing up towards 60K once again on the CPI data. It's coming down to 53.8, but with the overall market pressure, the ugly bearish sentiment we have in the markets right now, there's not a lot you can expect. Ethereum, I know I love using my 4-hour EMA on the stocks. I throw this on here for the cryptocurrencies as well. The 4-hour time frame is the best bigger picture scenario trend you can get, and I love using it. So I use the EMA. It's not 9 EMA. I know 9 EMA is probably one of the most popular ones. I go with 13 EMA. Here on the 4-hour, you see how beautifully we've been riding that EMA. There's been two situations where it's been kind of toppy under 4K. This is the second time it's done that. So if it does pull back, like I said, 3,500 is where I believe it can settle. And with the ridiculous gas fees with Ethereum right now, I wouldn't be surprised. Dogecoin under 50 substantially now. It is a triple bottom at 43. Like I said, I'm waiting for 30 cents. I do think 30 cents is possible. 30 cents, by the way, I believe, if I'm not mistaken, was the level of the price it was at before it started shooting up due to the SNL news, which ended up being a buy the rumor, sell the news. Go figure. That's such a big principle and so true. The next buy the rumor, sell the news event, I guess, is going to be the rocket by Elon Musk to Mars, the Doge one. I'm sorry, to the moon, not to Mars yet. Overall, at the end of the day, we have a very ugly market. We have unstable, shaky cryptocurrencies at the moment. We are getting jabbed left and right. It is just Wednesday, to put it into perspective. So I have 48 minutes left into the market close for stocks, but crypto, the show goes on, and 2 more full trading days of stocks. I'm expecting at least 1 day out of the week in which we see stocks to rebound. I wanted a rebound this morning, just like we did last Friday. Horrible 220K jobs number that came out on Friday, and the stocks went up. Stock market was broken. It did not make any sense at all. That's what I was expecting today. Let's see if we could get away with it. See the market push on horrible data, but no, fears still linger. Be safe, be careful, manage your risk, know what you're willing to lose, know where you're going to exit, where you're going to take profits, where you're going to enter, where you can potentially double down. Just be safe and be conscious of what you're doing. Screw the FOMO. Screw everybody out there telling you to diamond hands. If you have to sell because you have a plan, you sell. They ain't gonna cover your loss. They ain't paying your bills. Stay true to yourself. Be safe. That's all I'm gonna say. I'll see you guys tomorrow. If you guys did enjoy this video, one more time, slap a like. I'd greatly appreciate that. It truly helps the channel. And subscribe if you are new. If you enjoy this type of content, leave a comment down below, and I will see you guys in the live stream tomorrow morning. Peace out, team.